So COVID comes to an end, and Biden sits back and says, COVID no longer controls our lives. And then in the midst of him saying that, war breaks out between the Ukraine and Russia. And now there's mass hysteria and tons of uncertainty. Hey everybody, my name is Jerome Maldonado, and I wanted to talk to you guys today about what's going on in the Ukraine with Russia, the dispute and the war between them, and how does that affect investors? How does that affect what we're doing in real estate? And how does that affect us as Americans in general, right? And so just some key points to point out as we get into this topic, and just to kind of run through and explain to you guys that with everything that's happening, the big question is, how does this affect us, right? How does this affect investors, and will it affect everything? Well, as you guys have already began to start seeing, the stock market has already started to drop and is plummeting. So is cryptocurrency. People are uncertain. So 401ks are going down, stocks are down, pension plans are down, and the world is sitting back more conservative now than they have been since the beginning of COVID and the pandemic. And so here we sit again, and we're getting hit with all these facts about things that are happening because of the Ukraine. People at one point in time thought that the Ukraine was just a trash country, no natural resources, no benefit to the earth, and nobody cared about it. Now they've been mining fine metals and gems, and they've been able to go out and find commodities in the ground soil, and now they become a very affluent nation, and all of a sudden it has Russia interested in the Ukraine. And so through the lack of negotiations, Russia goes in and stampedes the Ukraine, and now we're sitting back as Americans going, will this affect our housing market? Will this affect our investment economy? And the answer is short term, yes. It is, because anytime there's uncertainty in the world, my perspective on things is anytime there's uncertainty, people hold off on their buying notions, right? So we as Americans love to spend. So here's the good news, is that anytime there's uncertainty, people refrain from spending. But as Americans, in spite of us refraining from spending, money burns a hole in our pockets. And so as Americans, we want to spend. It's what makes Americans feel good. So how is the United States going to be affected by this? So on March 15th and 16th, the Federal Reserve has their meeting. And this big meeting of the Federal Reserve prior to the war breaking out was a meeting to say, shall we or shall we not raise interest rates? And I think we all, by this time, know what the answer to that question was going to be dilemma between the Ukraine and Russia. The answer was going to be that we were more than likely going to see a 1 basis point raise of interest rates, meaning that we're going to see about 0.25% to 0.5% hike in interest rates after March 15th. Now, what will the Federal Reserve do is the big question. Because right now, the feds are fighting a mass recession with everything that's happening in Russia. So if they increase interest rates and housing becomes more expensive, what does that do to us economically? Okay, and I'll tell you guys how we're handling this right now, because as most of you guys know that follow our full-time content, we buy land, we build houses, we buy land, we build apartment complexes, and we've been in real estate development for over 20 plus years. So as a developer, to hear my perspective on how this is going to turn, I sat back and I wanted to see what the National Association of Home Builders is doing and how this is affecting them. And what the National Association of Home Builders says is that Russia-Ukraine dispute will add short-term volatility to the bond market, and it's going to increase all of our construction materials. Now, as you guys know, building costs have went up by over 22%. Just due to inflation in the last year. And so according to the National Association of Home Builders, they're saying the lumber costs went up over 40% just in the last 13 months alone. That increases all of our overall construction costs. And so when we sit back and we look at things economically, we go, okay, we have increased construction costs, increased interest rates. If the Federal Reserve decides to do that on March 15th and 16th, then our housing affordability becomes questioned. And the first sector of real estate, ladies and gentlemen, that's going to be affected, the first sector of real estate that's going to be affected is going to be the luxury and secondary housing market, meaning that luxury homes and vacation homes, vacation rentals, those will be the first sector of real estate that always get hit first, because those ones aren't as important as your primary residence. Those are more luxury items. Those are items that people don't need as much. So people start falling back on payments on luxury properties and secondary vacation homes before they fall back on their first primary residence. Okay? Now, this is very important when you look at the entire demographics of the world and you're looking at things based on economic value. Secondary housing market gets hit first. Who gets hit second? The single family homes and entry-level buyers. That's who gets hit second. So when we look at this economically and we take a look at increased costs and we talk about expenditures, we're not just talking about the price of gas at the pump. We're talking about import and export and the cost of freight to get things from point A to point B. That affects us, that increases inflation on all goods and services. So we're talking about groceries, we're talking about gas prices in the home, heating and cooling your home. We're talking about all of the expenses that the average person has to bear day in and day out that they're not exempt from. And so the people that get hit the second are our entry-level home buyers that are less affluent than our established home buyers. So we sit back and we go, okay, the second largest housing sector to get hit is our mean. The houses that are selling for over $350,000 and right thereabouts, the housing market that's being hit and affected by our average buyer that's coming into the first-time home buyers programs, the average buyer, over 60% of our population, that if their income fluctuates by over $200 to $300 a month in revenue, it could put them in a bankruptcy if they live through this for over 3 months. So I was reading an article from Merrill Lynch that came in the other day. And the article was somewhat sassy and sarcastic to what's happening in Russia, but also had a point of seriousness to it where it said, hey, ladies and gentlemen, we at Merrill Lynch don't feel like this is going to be a long-lived event. It's going to be short-term, and it won't really affect us because Russia really doesn't have any large economic play in our world as far as import and export here in the United States. So don't be alarmed. Stocks prices will be affected temporarily, but they will plateau over the course of time. Now, that's speculative, right? So if you guys know anything about how Jerome Maldonado does things, I hate speculating. You have to use smart. What's a hypothesis? It's an educated guess, right? So I sit back and I look at the real estate market like a hypothesis, and I say, okay, you have to use the wisest information that you can to make a hypothesis on what's going to happen in the housing market and how you yourself should invest. So as you guys see, we're working on building out apartment complexes. We have homes going up, and in 2008, we were highly affected by this stuff, so we're somewhat sensitive to the way the market conditions go. And as you as an investor should be as well. And so a lot of people that have been affected by their 401ks, their stocks and all this, they're sitting back and they're going, okay, there's pressure on the market. And so jittery investors, they're sitting back going, I'm going to pull my money, I'm going to put them into safer options. And they think, well, I'll put it into mortgage-backed securities, U.S. Treasury notes, or more secure corporate bonds. And then I sit back and go, okay, a lot of those only pay maybe 2%, 1%, 3% if you're lucky. And so if I look at it in the basis of real estate investing, I sit back and I still ponder and I go, is that really the best place for my money? Now, maybe your mom and pop who worked regular 9-to-5 jobs that are super conservative, maybe that's a good place for their money. But as a real estate professional, as a real estate investor, if you're watching this video and you're sitting back going, should I put my money in more secure places like that? Well, I sit back and I always exercise things on worst case scenario. And you look at the way rent prices have went over the last couple years, the best asset class that you can invest in is multi-unit real estate, multifamily real estate. There's a need. E-commerce is continuing to grow. So as we look at the warehouse sector and fulfillment centers, distribution, retail, no matter how the world is affected, we as consumers are still in need of goods and services. We're still going to need to have the oil changed in our cars. We're still going to have the need to buy groceries. We're still going to have the need to put fossil fuel in our car. We're still going to have the need to go out and buy towels, goods, services, coffee, juice, whatever it is. We still have the need for those goods and services. So over the course of time, something has to plateau. And when we look at inflation and we look at us as consumers, as Americans, where is the best place to put our money? And the answer is we need a roof over our head. And if people are going to continue consuming, why should we be so drastic as to pull our money and put it into nominal investments instead of putting it into cash flowing investments that are more stable over the course of time? Look, ladies and gentlemen, there's still a need to have a roof over people's heads. Just because an economic crisis hits and there's world jitters that are happening worldwide, not just nationwide, we sit back and we go, okay, if this is affecting our global economy, where should I put my money? And my answer to you is we still have fulfillment centers that are going to be utilized for distribution of products, goods, and services. E-commerce is continuing to grow, and we still have multifamily because a lot of people still don't want to have the responsibilities of having first-time home buyers, mortgages, and maintenance on a home, especially when we're going through these conditions. So if you invest in multi-unit real estate, your money is still safe over the long haul. Now, when we sit back and we look at housing and we look at what we're doing in housing, I didn't invent a housing model that was set up for other people. I actually embarked upon it on accident based on the fact that I went after an asset class that I felt was the most lucrative. And so it wasn't the luxury homes and secondary housing market. It wasn't the base model homes that at the time I started building was in the $180,000, which today is over $350,000 for the median home. We hit just above that because you think about your grandmas and grandpas, your moms and dads, the people that have been working a job for 30, 40 years, and you go in and you look in perspective to what these people are doing economically. A lot of them are retired, they're on fixed income. In spite of the economy fluctuating, they really aren't affected that bad. Now, some of them are, if they're relying on their stocks in the stock market, but if they hold for a short period of time, historically, over the last 50 years, real estate and stocks have continued to go up at about a 45-degree angle exponentially over the course of time. And so where normal conditions usually yield a 2 to 3% increase in housing appreciation, we're seeing mass appreciation in excess of 20% over the last 18 months since pre-pandemic. And so we're still seeing appreciation in housing. And now the question is, how is our housing market going to be affected by all of this? Are we going to be pushed into a recession based on the meeting that happens on March 15th and 16th? Will the feds raise interest rates? That's a date that you guys all need to pay attention to. I'll be bringing you guys more in-depth information in regards to those dates. But the whole key component here, ladies and gentlemen, is don't freak out with the market. What happens most is that most people freak out when something like this happens. When the pandemic happened in March of 2019, what did everybody do? They panicked. But by July of 2019, the housing market started to incline, and everybody that was panicked started realizing there was mass inflation. And so a ton of people benefited from what happened through the pandemic financially with the real estate market. Now, will the same thing happen with what's happening between Ukraine and Russia? Well, we don't know. But we're still in the interim infancy stages of this war against the Ukraine and Russia. And so I always tell people, too much media is bad. It's like anything. You eat too much carrots, it's bad for the heart and soul, right? If you drink too much Coke, it's bad. If you drink too much alcohol, it's bad. Anything in excess is bad. So when we talk about the news, we talk about media, we talk about opening up your phone to negative stuff every single day, it's bad. So take it in moderation, ladies and gentlemen. Don't freak out. Just because the world says, just because media says that the world's falling apart and that Russia's attacking the Ukraine, doesn't necessarily mean there's going to be a world war, right? It doesn't necessarily mean that. And it doesn't mean that because stock prices are dropping today that in 6 months from now, they're not going to be going up exponentially. But when we sit back, we look at day in, day out economic stuff, watch what happens in sequential order. Take a deep breath, turn off your television, and invest wisely. Watch what the successful investors are doing. We're not making irrational, quick decisions. We buy things off in pace. And we just walk through each phase of the process of this war, the pandemic, and whatever else the world has to throw at us over the course of time, step by step, phase by phase. Because the only people that lose in real estate are those who panic and those who sell off. If you can hold your real estate through a contraction, if you can hold your cryptocurrency through a contraction, if you can hold your stocks, your 401ks, and all your annuities and all your other investments through a downturn economy, and you can get through it, on the other side of that downturn, historically, there's a rising economy. And so, ladies and gentlemen, we've proven to be the world's ambassador of economics over the course of time. I don't foresee that going away anytime soon, especially if Americans like you and I continue to fight for capitalism, for our investments, and our free enterprise system will continue to move and drive. Click below, subscribe to our YouTube channel, and I just recorded a full-length video regarding jumbo loans and conforming loans, the difference between the two, how this is being affected by interest rates. You're going to want to watch additional information on how the potential increase of interest rates can and will affect the American people and you as an investor. Click below. I put the link in the video, so wherever it is, just click, and we'll see you on the other side.